Hey guys, it's Doc's Market Minute for Friday, April 24th. I want to show you Radian. This is a setup that I just closed out today after about, I think it's 13 trading days in the market. So this one took a little while to cook, and you'll see the reason why. But we closed it out today for an 85% return on our capital, and that includes commissions. One of the first things that I want to see when I'm looking at a whale trade is I want to see the trend going in the right direction, especially on the larger time frames. And, say what you will about this trend here. This one obviously got destroyed. Radian got destroyed in the financial crisis here, but has been very carefully building up a base, a nice double bottom down here at some very, very low price, and has since been, you can see this kind of here. This is almost a rounded base setting up. And as we'll see, that's really important because that's one of the principles that I talk about, which is fractals, that we're going to see the same patterns on different time frames showing up. So it's almost like a parent-child relationship where the child is almost a carbon copy of the parent. The apple didn't fall far from the tree. It chipped off the old block, right? And when these patterns show up and stack on top of each other, they can be very powerful. So what we're seeing here is that we're seeing a lot of consolidation, a lot of very non-linear price behavior. And what this does is this winds the spring tighter and tighter and tighter. You can see these very high values here. And we also have an uptrend on the weekly chart with some choppiness here. And we can see kind of the same type of rounded base to this pattern. I love this pattern here. This creates a lot of power. And then we're also seeing the same thing on the daily chart. The daily chart is showing a change to an uptrend here with higher highs and higher lows. So everything looks good from a trend perspective, and we have lots of energy to be able to power the next trend from here. So everything looked really good from a charting perspective, but wanted to see it starting to break out above the $17 level, and it started to do this on April 7th. So that was the entry of our trade, and what we do is we calculate the expected move, which I went into yesterday, and the expected move in this case was 1.57. So that's going to put the expected move, in this case it was for the May option cycle, up around 18.5. So if the starting point was about 17, the expected move or the price target for here was about 18.57. Now, one of the things that I like about these whale trades is the market is typically, and when I say the market, I'm talking about the options market. The options market is forward looking, right? It's forward pricing in what it thinks the move is going to be. And because of the fact that it's so choppy and the price is going nowhere whatsoever, many times it will underestimate the amount of forward movement on stocks like this that are just wound up beyond belief into this explosive behavior. So let's see how this one turned out by going to today's chart. Okay, now we've switched over to today's chart. So this is April 24th. And what we're seeing, first of all, is that the price, since that early April entry, what it did initially was it broke out a little bit above there, and then this is very common to see from stocks that are breaking out above an important breakout zone like this, is that initially they break out and then they get hauled back down, profit taking, shorts come on board, whatever, and that area gets tested again, and then all of a sudden we had a big upside gap, and this thing has been running since that point. This is very common behavior when we have stocks that are just wound up like this. All that energy, all that potential energy is looking to go somewhere, and the path of least resistance in this case was to the upside. All right, now notice also where the price is right now. It's very close to that expected move target, which was just over 18.5. The other thing that I noticed yesterday was that, we have an overhead resistance point here from 2010, which is 1864. Now, I don't know whether or not there's going to be overhead resistance up here. Probably not, but you just can never tell if there's going to be overhead supply up in this area. So that's something I didn't want to really have to deal with, was overhead supply slowing this thing down. And so we took profits today as the price was not only hitting the expected move target, number one, number two, at that overhead resistance point, and number three, we were getting very close to daily exhaustion down here, which again can cause those intermediate consolidations, much like what we saw with yesterday's example with Tesla. When we're in trades like this, we want to capture that momentum. We want to capture that explosion and price and capture profits immediately. We want to get our fair share and then get out of the trade. We can leave the buy and hold trades to other people. We just want to capture our share of profits. And in this case, it was 85%. So I might have been able to get that last 15% of my target, which is 100%, but then I would have to tangle with overhead resistance and exhaustion and those kind of things. And plus, we've only got a couple weeks left now. Well, 3 weeks left in the May option cycle. So things are starting to erode quickly. I don't want to deal with negative theta for this trade. So that's the Radian example. That's what we did to get in. That's what we did to get out. And you guys have a great weekend, and we'll see you back here on Monday.